Hedge fund pioneer Julian Robertson has died at the age of 90. Robertson founded Tiger Management in 1980 with $8 million in assets, eventually growing the firm to more than $20 billion. Along the way, he mentored a legion of managers, many of whom would carry on Robertson's legacy by founding their own firms. One of those so-called Tiger Cubs joins us now. Dwight Anderson is the founder of Osprey Management. Welcome, Dwight. It's good to have you with us today.
Scott, thank you for having me, although on a sad day like this, it's unfortunate for the reason.
Yep, of course. And our condolences, of course, to you and all those who did know Julian. How will you remember him?
I'll remember Julian for his generosity. I was one of those people, along with Lee Ainsley of Maverick, actually, who was a double beneficiary in that I was able to attend business school on a fellowship, the Tiger Fellowship, that had originally been given in Julian's honor by Gilchrist Berg, and then he added to it. And as I said, Lee was one as well, too. And so that made my ability to actually make it to Wall Street and then to be hired into Tiger Management, which made my career possible. He took a bet on myself and others at an experience level and gave us a responsibility and opportunity that no one else would have at that age. And I've been forever grateful.
It's pretty remarkable if you look at the list of so-called Tiger Cubs, and this just names a few, including you. You mentioned Lee Ainsley, of course, Chase Coleman, Philippe Lafont, Glenn Kacher, Chris Shumway, and so many more. What made him such a great investor, and what did he instill most, do you think, in those gentlemen and others who have followed those so-called Tiger Cubs to found their own firms?
So what Julian was a phenomenal stock picker and also a phenomenal selector of managers, both in terms of corporations and then managing capital. He was exacting and focused and gave you as much resources and time for research, okay? Focused upon getting it right and where you're right and the constant questioning of that. I mean, probably some of the best in terms of that was Steve Mandel and the fellows and the other people who were at Lone Pine, whether it was David Craver, Marco Blada, and Andreas Halverson over at Viking. And so it was that fixation on just constantly questioning and work and effort in terms of that. But more than that, he taught us that it wasn't just what you did during the day in the markets, it's what you gave back when the markets were closed. And, one of the things that I'll always remember and try and live accordingly is the generosity, both in time, but especially resources that Julian gave to so many different charities, like one of my alma maters, North Carolina, or Duke, or the Success Academy. He was just phenomenally generous for so many different causes.
He was really as prolific off Wall Street than he was on. I was reading, so much has been written, obviously, through the years, but especially once we learned the news today, I was looking at what some have written about the investing lessons that they've learned from him. One was said by this person, a smart idea grounded on exhaustive research followed by a big bet. And I think the point there was, have conviction, and if you do, and you do your work, don't be afraid to make that big bet. And that's what made Julian in many respects, and others have followed in that light too.
Yes, it was exhaustive research and also willingness to take risk and continue to add to that risk, which was second to none. It's something that I wish I could do it as well. I won't, and so that aspect of his risk taking was exceptional, and so you can aspire to the hard work, but to the aspect that I won't be able to hold myself equal is what he did in terms of the size, scale, and competence of the bets that he took.
Yeah, I hope you'll oblige me a few questions on the market while I have you. I would like to get your thoughts, if I may. You certainly you run a commodity-based fund, so that's your wheelhouse, your expertise. So much in the news these days, whether it's natural gas exploding higher, we've got oil close to 100, got the dollar very much in focus. What are you most focused on today?
So I would say that given the uncertainties over the economy going forward and the strength of the dollar, those commodities that are most sensitive to the industrial cycle we're wary of. And they have offsetting pluses and minuses of energy cost pressures, which are causing people to shut capacity in terms of producing aluminum or zinc, but weakening demand. So those areas we really focus on, call it food and fuel right now, because of aspects of impact to supply, whether weather or geopolitical. We have an incredibly tight food environment out there. And so the potential prices that you should see in markets like corn, or those that are more energy related, like forward vegetable oil, bean oil, or even something that's just completely economically insensitive, but is also phenomenally mispriced due to liquidation in the commodity markets like cocoa. I think a good number of these markets could be 20 to 40% higher here, whether it's food or liquid fuel.